Brilliant. Well, look, first of all, thank you very much for joining today's webinar or listening to the recording. My name is Sam Mickey. I head up the advisor sales over at MICAP. For those that are not familiar with MICAP, we're a whole of market research platform that looks at tax efficient investments. So we're talking EIS, VCT, and business relief. Now, clearly, this is going to be a slightly higher risk area of what you tend to recommend to clients. So I think from a compliance point of view, it's really, really important that you're able to sort of get your arms around the whole of the market, but also, evidence that you've got a really robust process in place, evidence suitability, and that kind of thing. And that's really what the MICAP solution aims to deliver. Now, some of you guys will have seen this, some may not have. So what I'm going to do, I'm going to run through, I think really just a pretty standard sort of demo, and we'll cover off the kind of data that we list on MICAP, but also the process that you should be looking to go through when you're carrying out your research across this market. So when you first come onto MICAP, essentially what you're going to be met with is just a long list of all the products in the market. So again, this is covering EIS, VCT, and also business relief solutions. So there's a lot on here, hundreds of investments. Now, I think what I tell people to try and do first of all is just try and focus in on really getting the market down into a more, I think probably just a more manageable shortlist, really, a more relevant shortlist to the advice that you're wanting to give. So really, really simple. We're going to start off by applying some filters. Now, if I go into this, pretty much every time you're coming onto MICAP, the first thing is, you're going to have a tax wrapper in mind. Okay, more often, unless you're doing generic research on the market, usually you've got a case on your desk, and it's really a case of saying, okay, well, look, what tax wrapper are we looking for today? Let's have a look at business relief. Okay, so business relief is obviously designed to mitigate inheritance tax, and there's two types of BR. So you've got AIM portfolios, which are great. Historically they've been great because you can hold them within an ISA. Obviously, post budget last year, you're now getting less tax relief. So more often than not, I think you're going to be looking at unlisted business relief. So if I go BR unlisted and apply that, MICAP just bring that list down. Okay, so the whole of the market as of 9 o'clock this morning is 34 investments. Okay, so that is it. That's absolutely everything that you've got to go at. Now, if you wanted to, you could have selected VCT, you could have even selected SEIS, or you could have selected EIS. So it really is, it covers it all, and it will bring out every offer that's raising money at that particular point in time. So we've got 34 investments. Now, we do look at corporate schemes. If you've got companies that would like to shelter money from IST, they can do so. Look, I think more often than not, most advisors are looking for an individual investor. So we'll get rid of corporate and we'll put individual on, and we'll go ahead and apply that. And that'll just bring it down further. So we've got 26. Now, if I scroll down, you can see there's probably some familiar names on there. So, most advisors are familiar with Octopus. Obviously, they manage a lot of VCT money as well as business relief, but they've obviously got, they're a household name now. So let's go in and we'll have a look at them, and we'll have a look at what data we cover. So if I open that into a new tab, essentially what we are now looking at is their fact sheet. So without having to go out to each individual manager in the market, you've got absolutely everything you need all in one place. Now, look, you guys could call up Octopus, call up Blackfinch, call up Foresight and request all their data, but to have it all in one place and updated for you by the team here at MICAP, hugely powerful. So this is where we cover all the offer details. So you can see, what the minimum subscription is. You can see what they've raised. You can see the AUM and the manager. Any investment details are on there. So legal structures, target returns, sector, subsector, tax details, and obviously, really importantly, fees and charges. Any advisor fees or any discounts would be listed at the bottom. Up at the top, you've got an investment summary, which for me, look, it's quite useful. It's a small thing. I tell people just put it in the suitability report. Very neutral, balanced, written by the MICAP analyst team, so you can use it, just copy and paste it straight across. If you then scroll down, you've got all the resources you need from the provider. So again, you can go out and collect this stuff yourself, or you can just download it from MICAP. And there's a couple of key documents from a consumer duty point of view you should be looking to get on file, and that's the fair value assessment, target market statement. Not a MICAP thing. It's a consumer duty requirement. You have to have them. So yeah, look, they're all there for you should you want to put them on file or whatever you want to do with them. What you've also got is the MICAP resources. So we review the manager. Okay, so we do a full review of the manager. So if I open this up and we go and have a look at the manager review, what this is going to give you is the details on the ownership and the management. It's going to have a look at their financial standing, so the recent financial history, what their revenue is, their cost, their net profit margin, their assets, etc. So it's all in there. Who are they in terms of their staff? What do they know about managing VCT money or business relief money? So it covers off each individual team within the fund manager. You've also got what their assets under management are. So it will cover what they've raised, but not only what they've raised in total, but okay, well, what have they raised in the last 12 months? Okay, so loads in there. Most people, though, find the offer review or the investment review of greater value, really, because what this does, typically we're looking at 15 to 20 page analysis, and this is where you're going to get track record. Okay, so this will cover off the return since inception, share price history, 5-year performance overviews. So again, this is data. You have to have it if you're going to be recommending these products. These are the things you have to be considering. But again, just to have it all in one place. And it's also, this is third-party due diligence. So you're not just relying on what the managers are telling you, because they can be quite creative in their marketing and what they tell advisors. This has all been checked by MICAP, and it covers all the diversification, what the investment process is. So, in simple terms, really, portfolio strategy, sector allocation, what their experience is. If I scroll down, you've got information on the asset profile, liquidity, HMRC compliance. I think when we're looking at business relief, this is a big one because it covers off the successful BR claims. Okay, so it's a big number. So how many investors have gone in and actually got the tax relief at the end? Regulatory compliance, governance, how they value the assets and the reporting. So loads and loads in there. Now, we know that the FCA want really detailed suitability reports when you're recommending these products due to, I think, the high risk nature of them. So we have a lot in here that helps with it. Now, this is quite a long document, 15 to 20 pages long typically. Now, what we do to help, if you didn't want to read the whole thing, at the top, we give you, where is it? Bear with me, scroll up. There you go. We give you the highlights and considerations. So essentially, we're giving you key bullet point format, areas that our analyst team think you need to be looking at. And again, very much written with suitability report in mind. So you can just go through, and it's a massive time saver, go through, copy, paste, straight into CSR. Okay. So that's the review. And then we've got our scores. So slightly different in that we do not give an overall score on MICAP. So on mainstream assets, they would often give a single score out of 100 or a single score out of 10 or something like that. With these products, again, we've done work with the FCA over the years. With these products, I think the concern with an overall score is clearly that advisors tend to just over rely on them. So what's going to happen naturally is you're going to select the highest number, recommend it to the client. So we have a different approach, slightly different. We break each investment down into 9 areas, which you can see, there on the left hand side, and then each of those areas we give an individual score to out of 8, and we're looking for low numbers. So essentially, green is good. Now, the way I would use this is I would use it to actually filter the market. So, for example, track record. Okay. Now, what do we look at with track record? We have the performance data here. So if I open this up, and we'll have a look at VCT and EIS a little bit later on, but on business relief, we look at the annualized total return since inception, and then we compare it against the manager's target. So look, I think it's a good way to look at these products, because it's a bit like saying, okay, well, look, this is what you said you were going to do against what you've actually done. And then we can just go through, and this is whole of market. You've got all your BR schemes listed here. And then we can have a look at Octopus. So Octopus launched in 2010. So been around a long time, 16 years. And their target return during that period has been 3% a year. That's what they tell investors. We'll get you 3% a year returns. Now, on the face of it, they've done that, because you can see there the annualized return since inception is 3%. What they may not be as forthcoming with is that maximum drawdown since inception. So the share price has dropped by 10%. So what happened? Well, you can click into each of these and you can see what's been going on. So you can see with Octopus, they've done, pretty much what they said they were going to do. Slight bump around COVID time. But then in 2023, the share price did drop and is still falling by 10%. So it gives you this information at your fingertips, all audited by MICAP. And it's really, really powerful just to have the whole of the market in one place. But what do we do with these charts or this data? Well, it brings me back to the scores, where you can use it to filter the market. So on track record, which takes those charts, we can go in and we can say, okay, well, look, from an advice point of view, we're only really interested in looking at the top end of the market. So anything below a 2, let's have a look at. Apply that filter, and MICAP just bring it down. So we've gone from, I think, 26 down to 13. The next thing is, and I think probably for me, the biggest one is this one, fees and charges, because again, not a MICAP thing. You have to assess fair value for the client. It's just MICAP don't want it, the regulator wants it, consumer duty requirement. So how do we do that? Well, we can go in, and business relief's not cheap, we know that, but we can go in and we can say, well, look, anything below a 4.5 on fees, see what comes out. And there you go, you've got it down to 7. So what we're doing, we're taking that whole of market view and we're slowly chipping away at it with really sensible criteria, and coming up with a shortlist where we can start to dive a little bit more into the individual investments and have a look at some of the underlying data, etc., and ultimately compare them. So I may add one more. What you can do, by the way, you can pull up the status of these, and you can see when they launched and what they've raised, and you can sort by all of this. Okay, so we'll put the biggest at the top and the smallest at the bottom. You can then pull up the scores, and you can also sort by this. Now, one of the other ones, of course, is manager operations and experience. So how established is that particular manager within this space? And that's going to be another filter that we can apply. And we can say, again, we really want a household name here. You know, the clients typically tend to be quite inexperienced investors. So not always, but a lot of, you know, a lot of business relief investors would want a big name. So we'll go anything below a 1 on that, and again apply it. Okay, so we got that down to 5. So we've gone from whole of market view right the way down to 5 investments, and then from there, it's essentially just going to be a case of saying, okay, well, look, let's see how these actually compare with each other. So how do they stack up against each other? So if I then select them on the left-hand side, you'll see this yellow bar lights up. And the first thing we can do is compare them. So if I hit compare funds, MICAP will just generate a report. My computer will catch up. Bear with it. So what this is allowing us to do, if I go in, I can edit it. We know that the FCA are hot on personalised research. So if I put the client's name in, any client details and notes can go in, and then go ahead and save it. From a compliance point of view, how did we actually come up with Downing, Foresight, Octopus and Time? Here are the MICAP filters. So there's our audit trail. If something comes back 5 or 10 years time, you know, why on earth have you put your client into Downing estate planning service? You have got the audit trail, you've got the research to back up the recommendation you made. I think the days of rocking up to your meeting with an IM and an application form, they're gone. You have to have proper, robust research, particularly when you're dealing with these high risk investments. So this literally delivers that, and it just keeps you in line with where you need to be from a research point of view, from a compliance point of view. And then you've got full comparison across all the data. So all the offer details are on there, all the investment details, tax details, fees and charges. And then I think the big one is the impact assessment at the bottom. So it's quite competitive at this level. If you're going off performance, you're probably looking at Foresight or Time. If you're going on fees, you'll be looking, you know, these 4 seem to be offering the best value. So it just depends how you dissect the data and how you interpret it. Every client's going to be a little bit different. Some clients may say, well, actually, we don't mind paying a little bit more if we can get a bit more diversification or a bit more liquidity or something, whatever it may be on that particular client. And then we just, up at the top, print that off, save it as a PDF, get it in the client file. It's all client facing. You can take it out to your service meeting. It's got your name at the top, date stamped. So, you know, real audit trail. And you can put it in front of the client as well if you wanted to. So that's the first couple of stages. I think when you first go on to MICAP, it's very much a case of saying, okay, well, look, let's try and get this whole of market view down into a more sensible place or a more relevant shortlist to the research you're actually doing for the client. From there, it's going to be a case of saying, okay, well, look, let's run our comparison report, which is your big compliance document. We encourage firms or advisors to get one on every single file. It's just good practice. I'm not suggesting you guys mandate anything, of course, but it's good practice to get one in there. Whether it's a MICAP report or you get the report from somewhere else, get it on file. And then from there, you may have a situation where the client comes in and says, well, look, we've got £300,000 to invest. And you may say as an advisor, and you probably will say as an advisor, let's try and build some diversification there, not just across managers, but across underlying assets and sectors and what have you. So it's really common that you would do this, but you may have a situation where, okay, well, let's put, and if I remove some of these filters, bear with me, just get rid of that one. So if we were to put Octopus, Foresight and Time, which are 3 of the big ones, into a portfolio, put the client's name in, Joe Bloggs, whatever it is. and then go ahead and save it. And then what MICAP is going to do, it's just going to ask us to input some values. Okay. So the days of faffing about on calculators or spreadsheets, trying to figure out, what are the blended charges. So you can see that I've put £300,000 in the portfolio, £100,000 into each investment. And then it just spits out all the calculations in the background, blended charges, annual returns. If I scroll down, the big bit is this one. So you've got the sector allocation on a really, really granular level. So you can see exactly where the money's sat in terms of what's going into fibre, wind, solar. And actually what stands out here is that we do have a lot in renewable energy. We've also got quite a bit in fibre. And to be honest with you, fibre's not performed brilliantly for certain fund managers of late. So actually a lot of advisors may say, actually, we're not totally comfortable with the asset allocation there. So what you may do is you may say, cool, look, let's edit it. We will remove Octopus and we will put Triple Point in, for example. Okay, so Octopus have gone, Triple Point have been introduced to the portfolio. And now what we're going to do, we're going to put the £100,000 into Triple Point and go ahead and save it. And it'll just rework the whole portfolio for you. So you can see, okay, the blended charges have changed. I think we've actually probably reduced the overall 7-year fee. And then what we've done and what we really wanted to do was, well, reduce fibre from 17% down to 5%. So we've knocked off sort of 12% there. But also we've also reduced your exposure to wind and solar, whilst increasing SME lending, corporate lending, public sector lending, which is more of a Triple Point play. So look, whether or not that is the asset allocation that you guys want as advisors for your clients is beside the point. The point is, for the first time, you can really get under the bonnet of these investments and see where the money's sat. So it's a hugely powerful tool. We're really proud of that, and it's absolutely unique in the market. So I'd encourage you guys. We're going to set people up if they want with free trials on MICAP. So go and have a play around with it. And if you've got clients who are currently invested into business relief portfolios, you can go and see what their asset allocation is. So hugely powerful. Print that off, save it as a PDF, get it in the client file. Okay. So you've got your name at the top, it's date stamped. So that is your portfolio. You can put up-to-date valuations in there. It's really nice client facing. We can brand it for you if you want. And it's just going to save you a huge amount of time, because ultimately you have to do this stuff, but it's a very, very manual process. So we have also the ability to have a look at the consolidated charges, which historically has been a massive issue. And we actually built this for another one of the big networks, where you have to show the product fees alongside your fees. And again, when you've got complicated portfolios, very complicated, you can see the charging structures hugely. The managers are very creative with how they charge on these products, where you've got, initial fees to the investor, to the investee company, and it can be very complicated. And then when you add your fees in, it makes it even more difficult to understand. And again, in a consumer duty environment, it's important that you're making things as clear as possible for the client. So what you can do, you can put your fees in here. So let's say we're going to charge 1% upfront, and then we're going to charge 0.5 on each. Okay, so we just put the amounts in, a percentage or an amount. With business relief, we would say 7 years is the ongoing charge, just because that's the gifting period. So if I put 7 years in each of these and go ahead and save it, what MICAP is then going to allow you to do, it's going to give you the ability to pull off a fee statement. So if I hit fees there, and open this up, it's going to give you an Excel spreadsheet which shows us, first of all, client's name at the top, advisor's name is on there, date created, last updated. Okay. And the first bit shows us the illustrative one-off fees that you might pay in the first year of your investment. Okay. So that's year one. Then it shows us the ongoing fees you'll pay in the first year of the investment. And then it will show you the illustrative fees you'll pay over the life of the investment based on a 7-year holding period. So when you invested, we invested in 2026. How much we invested? 300,000 quid. Total advisor fees are £4,500 on each investment, so 4.5%. Total product fees are on there as well as a pound and as a percentage. And then you've got the total fees at the bottom, and that's both as a pound and a percentage, and that's based on 0% growth. So you can explain that to the client. But again, it's a really, really nice thing to have because you're going to have to do it, whether you use MICAP or another, it can be very manual. So this eliminates any mistakes and just gives you everything you need at the click of a button. So that is the consolidated charges report. You just file it away on each case. And then I mentioned that I wanted to come back to some more performance data that we carry. And the reason I want to do that is because, you cannot log into Morningstar or Defaqto Engage or FE Analytics, or whatever you guys use, and download EIS performance. You just can't do it. It's very manual. And for you to get performance data across these products, you literally have to pick up the phone to the manager and request it. Or previously you did, because now we do that for you. We've got the data, we vet it, we audit it, and make sure that it's completely up to date for you. So with EIS, we look at the realised and unrealised returns since inception. Now, I mentioned you would have to ring up the manager and request it, and if you do, they will give you their internally calculated valuation. So essentially, look, they're marking their own homework. They're pretty much pointing at their own asset and they're saying, well, we think it's worth this. So we give you the option to look at that, should you wish. But what we encourage you to look at is the price of recent investment valuation. So the price at which most recently an investor's actually gone in at. Now, what's quite good, we can toggle on pound amounts, and it just paints a really, really interesting picture of the EIS market, where you can see there's, probably 5 or 6 standout performers, and then everyone else has done very little. Okay. And we'll have a look at the obvious one here is MMC. And they're one of the success stories of the EIS market, where, where they've invested, it's big, right? They're the biggest, actually. So they've invested £365 million. Okay. Of that, they've realised essentially half of it. So 168 million they've exited and distributed back to their clients, to their investors. And the unrealised value there is 446 million. So you can see the return multiple is 1.7x. Now that's useful because we can see what the fund has done. What's even better is we can click into each of these and you can see what they've done tranche on tranche. So tax year on tax year. And if you're sat down with an EIS client, I think realistically you're going to be talking about 7 to 10 year really for a full exit of one of these things. Now, if I go back, and this is a good example, I know it's more than 10 years ago, but if we were to go back to 2012-13, let's say the client puts £100,000 in, they're part of a £6.44 million investment round. The first thing that happens is obviously you get your upfront 30% tax relief. So the investment didn't cost you 100 grand, it cost you 70. You've also been able to defer your gain over a 10, 11, 12-year period or whatever it may have taken to exit. And then on exit, you get 3.2x on your initial. So if you are talking to EIS clients, this is a really good way to actually explain it to them. And what does good look like in terms of an EIS investment? Well, that's kind of it. Doesn't happen all the time. You've got to be really, really clear on that. But it does look like MMC are going to follow suit pretty much in every tax year. I mean, even if you had invested 5 years ago in 21, 22, you're already pretty happy because you're part of a £56 million investment round. You've already got, what is it, 20% of your money back, and you've grown it at a 1.3x multiple. And it's looking pretty good in all these years. We also have data on how many investments each manager has made against the number of exits at or above par. So who's done well, and then who's not done so well, number of exits below par. Okay. So that's EIS, and then we've got VCT. Now, VCT performance is not such a secret. You can get this elsewhere, but I think we've got this down in a really, really usable format where you can properly compare it. Because often, if you log into different platforms and try and look at VCT performance, it's very difficult to compare it. So this is all on one page. We look at the NAV TR, so the net asset value total return, growth plus dividends. And what's quite nice is you can toggle off the NAVs and you can see straight away, right, who are the big dividend pairs? Obviously, VCTs are all about tax-free divvies. Toggle off the dividends, see what the NAVs have done. A lot of NAVs are down, as you may expect with the VCT. Toggle on the dividend, and you can see, exactly what they've done. So this is the total return. And you can see British smaller companies, they're top performer over 5 years. Their NAV's grown by 13.9%, and they've also kicked out 43.7% in dividends. So the NAV TR over a 5-year period is 57.6. And you can change the tax year. So if you want to look over 2 years, 7 years, whatever it is, it will just pull it out for you. So I'm conscious that I've just rattled through quite a lot there. That's MICAP. Now, there's a lot more on here, but that's kind of how the research journey would go, and that's kind of what good looks like in terms of your research. Now, there's a couple of things I wanted to offer. Firstly, everyone's absolutely welcome to have a week's free trial, so you can jump on there, have a play around with this in your own time. I'm also very happy to jump on one-to-one sessions or run through the platform in detail with anyone else that wants to have a look. And also, we're very happy to offer a 15% discount on the subscription fee. Prices start from £40 a month plus VAT. There's a minimum of 12 months on the subscription, depending on what features you go for. But obviously, we're very happy to have that conversation if anyone wants to discuss it. But that's it, really. That's MICAP. I wanted to open up if there's any questions. Now's probably a good time to ask them. Otherwise, I'll hand back to Mohan.
Fantastic. Thank you very much for that, Sam. Appreciate that.
No problem at all.
It doesn't look like there's any questions. So I can't remember. Are you going to be doing CPD at all? Or
there's no CPD on this.
No CPD on this. Okay. All right. That's fantastic. No worries.
But Mohan, if you want to distribute my details, feel free to do so. Yeah, as I said, very happy to help if anyone needs anything from us. Yeah.
Fantastic. All right. Well, we're going to be sharing this with everyone anyway. So yeah, that's great.
Brilliant.
Thank you. Thanks very much.
No problem at all. Cheers, guys.
Yeah. Cheers.
Cheers.
Thanks,
Bye-bye. Bye-bye. Bye.